Good morning, folks, and welcome to another fantastic edition of Money Truth Moments with our very own fantastic money expert and whisperer, Judy Copenbarger. How are you?
Fantastic, apparently. Oh, what a great
Well,
Tuesday morning. What a great Tuesday morning. How are you doing, Carlos?
I'm doing fantastic. I'm not haven't even had my second cup of coffee, but I feel like I'm bouncing off the walls already. So God forbid I have that second cup, you
Well,
know?
it's going to
So
be a good day. You can tell.
it is.
I
And
love it.
folks, if you're just joining us, welcome. If you're not following Judy, please do so at judycopenbarger.today. Today's episode, we begin April. We begin with a lot of things happening in the finance world in April. One of those things is actually taxes. So today what we're going to talk about is what your tax results really mean for your financial plan. So what we're hoping you're going to learn from this episode is how to interpret your tax results, what refunds and balances do really indicate about your financial habits, and how to use the information just to improve your financial plan moving forward. So I am dying to know because it's a crucial topic for just about everybody that I know. And again, if you're watching, please share the stream because this is a very important topic that we're going to be discussing today with Judy. So what do you say we get started, Judy?
Let's do it. We're ready.
Okay, so most people feel relief or frustration right after filing taxes. What do those results actually tell us about our financial habits?
Oh, one spectrum or the other, relief or frustration. And I
Mhm.
would add one. I would add regret. Some people feel kind of regret, but I'll tell you, I think relief is a big one. And it's not only relief like, oh, we get money back, but sometimes it's relief, it's over. I did all that work. I had stacks of paper on my dining room table and I was going through getting everything the accountant needed and pulling that together and looking through my emails and records. And that's a pain. I don't like it either. And I'm a detail person. I don't like that. I don't like it at all. But pulling it all together, I think when it's finally done and the numbers are in, good, bad, or ugly, it's over. And so I think there's definitely a sense of relief there. I think for some people, it might be frustrating because here I am again. I thought I would be in better shape. I thought I'd pay less. I thought I had saved enough. I thought I withheld enough and I didn't. And it's like, oh, so there's that kind of like regret or that frustration at the other end. I think that tells us a lot about not only our preparation and planning, but a little bit about our mindset, our attitudes about taxes and, shoot, I had to pay so much or shoot, I didn't get as much back or whatever it is. I think that tells us a lot about our attitudes and kind of the subjective part of it besides just the numbers and the objective part.
No, you're absolutely right, and I love the fact that you're talking about basically both sides on this too, right?
Yeah.
Uh, it's funny because over the years I've seen folks that are very excited about going to see their tax guy during the tax season. I'm like, how do I get to that stage, man, where I can just smile all the way there before I sit down with them, right?
Those are
Um,
the people that know they over withheld and they're going to get a big check.
exactly,
Which,
and
it solves a problem, but it can create another one. And we'll talk about that in a minute.
no, absolutely. And I think the other part of this is also people tend to assume, right? We tend to assume, oh, well, I'm going to pay a ton of money this year, not knowing what they can claim or not. So, why do people think a refund is always a good thing and owing is always a bad thing?
I think a lot of that is just maybe natural, but the CPAs, I think the people who prepare taxes kind of train us that way. So if you think about the perspective of someone who's doing your tax return for you, they want you to get that big, that big dopamine hit. Yay, you got a big check. Look, I got you money back because you're happy. You're going to hire them again next year to do your returns. So I think that's a big deal. It also feels good, to get a check. But if you think about it, that what you owe in taxes has nothing to do with your tax return. That's something a lot of people misunderstand. They think what the calculation is on their tax return is what their tax is, and what they sent all year long was the tax. It's not. It's an estimated tax. So it seems a little non-intuitive, but the government wants to get the money ahead of time, right? They don't want to wait till the end of the year when we've already blown it all because they know they're not going to get paid, right? And then you get penalties and they just never get their money. So they want to get it every time you get paid. They want to get their piece to make sure they're paid by the end of the year. So we're estimating how much the ultimate tax will be. We don't really know at the beginning of the year what the tax is. We'll never know until after December 31st calculations are in. But we estimate, we say, well, based on last year's income and based on the projected income this year, this is what we think it might be. And so we send money ahead. If you have state income tax, you send that. If you have federal income tax, we all do. You send that. Most people, well, some people are exempt, but most people pay that. And so the money goes in every time you get a check. You send a little percentage in. Sometimes it's a lot, but it's a percentage. You send it in and you say, this is close to what I think my tax bill will actually be. The accountant then calculates all that and they say, okay, here's what the actual tax is. Here's how much you paid. So if it's more than what you owe, we're going to send you some back, or you can save it for next year's tax bill. If it's less than what you owe, you better send the rest right away. It's due right now. So that's how it works, but we don't know. I mean, people think the tax that they pay on their withholding, like if you have a job and they have that percentage that goes out, that's your tax bill. It's not. It's a prepayment against a tax bill that will come later at the end of the year.
And that's great points, because a lot of us don't really believe that you're paying your taxes ahead of time and so forth until you get either you're underpaid, you get that shock factor, or you overpaid, you still get that shock factor, right? Um, so let's talk a little bit about real life experiences, right? In looking at patterns, what patterns do you see when people they're always getting big refunds or consistently always owe a ton of money? What,
Yeah. So, and a lot of my clients are not consistent. We try to estimate and we try to get it real close. So there's not a big swing one way or the other. Some people are not really good at saving. Imagine that, right? They don't allocate enough in their line item every month to save for their future. So one way they do that is over withhold and then get the big refund and go, yay, every spring I got money. Well, that can work. And I think for some people it does work. But if you think about it, all that money was could have been invested. It was held by the government for you, and they're just giving you back your money with no interest. Now, when we owe them money, they're happy to charge us a fair interest. When they owe us money, they don't pay us for the money they held all year long. So financially, it's not an optimal situation. But for people who can't save, they like that. They like knowing, okay, every spring now there's money, we can plan our vacation or pay off the car, whatever they're going to do. If people consistently owe money, that's fine. They might be planning for that. And so they're saving money every paycheck or every month toward that tax bill. This is a big deal for people who are self employed or have their own business. There's no withholding. If you have a job, a traditional job with a W 2, they have to take that withholding and you say how much you want to estimate that tax to be to prepay it. If you have your own business, you're going to have tax later. And this is where some people with their own businesses, when they start out, get burned because they don't really plan for that. You want to plan 20, 25%, maybe more for your tax bill that you don't even know what it is until the end of the year because you don't know how much your business will make. So that's an important kind of side note or side tip that I want to give you. If you're in your own business, always save more than you think you need for your tax bill. Worst case, you'll have extra money to capitalize next year's projects. But at best case, you'll have enough to cover that bill and not get burned. And it's like, shoot, now next year I have to make more and borrow money maybe to pay that bill on time. So if you are consistently doing it one way or the other, and it's consistently that frustration, it's not working for you, you might want to come up with a plan to make it a little more, better, different next year. And you can do that.
and folks, talking about this too, make sure that you're also following Judy Copenbarger.today. You can see the QR code on the top left-hand side. So scan that. It'll take you directly to her website. You can find a lot of great resources. And believe me, just take your time because she's got a wealth of information. And thanks for joining us this morning. So it's a great topic because we all go through it. We all go through the fun, the sadness, the tears when you have to pay so much money. But it's always important and every year to just take that time to talk to somebody who's an expert on this. So let's talk a little bit about just simple basic education. If this is, if let's say for the last few years my CPA hasn't been doing what I think he should be doing, or again, we've talked about this also about not knowing what you don't know, right? Um, how should people get a hold of an accountant or somebody that can do their taxes? Like, what is the criteria, and how should people really interpret their tax results in a very practical way?
Ooh, two different questions. So the first one is, how do you pick the right guy, the right accountant or gal? Mine's female. And then how do you interpret your tax results? So the first thing, you want to make sure that you have a really good fit with your accountant. They know you, they know if you're in business, they know your business, they know your family, they know if you're a giver, that's important to you. You want to make sure that there's a good alignment. And we have the 4-H method of determining whether there's a really good fit for you with any professional, any financial professional that's serving you. So it's head, heart, hands, and how. And you can look that up on another show or another podcast. You really want to know that the 4-H method is in place to have a sustainable relationship with your accountant. So that's one thing. Make sure you have the right person. If it's not a good fit, this is a good time to recognize that. You don't want to try in March next year to find a new accountant. You want to be doing that in May, June, July, when they're not so busy with all of the other quarterlies they're doing for the business returns and things like that, because they're up to here in
Right.
files. Are working till midnight, sometimes past that, every day to try to get people's returns done that didn't get it done, early. So it's a busy time for accountants. You want to make sure that when you vet them, you do it when they're fresh and in between all that. The second part of your question was, how do you um,
How do you
practically
interpret?
in,
Yeah, in a practical way.
how do you interpret the results? um,
Yeah.
I would say, if you just understand the basics of how taxes work. So we're talking about income tax. There's a lot of other taxes. There's 50 others we could talk about, but income tax. When your income tax is calculated, you start with, how much money did you make? Where did it come from? It came from salary. It came from a business that you have, a farm that you have. It came from a pension that you have. Maybe if you're retirement age, it came in from your IRA or your investments, interest, all of those things. So all of the income is calculated. And then it says, well, what other things adjust that? Is there income that you had that shouldn't be taxed? So that's subtracted, and then you get your AGI, your adjusted gross income. Then you say, okay, well, my adjusted gross income, are there any other things that apply? Do I have an exemption? Yeah, most people have at least a standard exemption. That comes off. Any other expenses that need to come off on any schedules that you have, those come off. So it's how much I made minus how much shouldn't be taxed minus how much is exempted from the tax, and here's how much tax I owe. Then it's like, if this is the tax I owe, how much have I already prepaid? Did I pay quarterlies? Did I have a withholding, on my paychecks? That comes off, and then it says, okay, here's the true up. Here's, either the how much you paid ahead or how much you are behind, and here's what you owe or not. And then you can decide what you want to do about that actual tax bill. So it's really good to know what the taxes are, and then they're going to, on the tax return, they're going to say, okay, here's what you paid this year. And this is good to know, by the way, if you have your own business and you're running your own taxes and you don't have it withheld on your paycheck, you want to make sure that you are paying your quarterly taxes. Remember, IRS doesn't want to wait until the end of the year. They think, oh, you're going to spend it all. We want to make sure you don't. So we're going to get it every paycheck or quarterly if you have a different way of money coming in that's not a paycheck on a W-2. So every quarter, we want you to figure out what your estimated tax is and send it ahead. Now, you don't know yet what your business will do. So we're going to assume that next year you're making what you did this year. And so your quarterly tax next year is going to be projected based on what this year's income was, what this year's tax bill was. For a lot of people, that's not fair. You have a really big year, and then, like realtors, this happens a lot, or anyone on commission. You have a big year and then one not so big, and then a big year and one not so big. So it's a little tough for those people without planning, because you have a big year. Now your tax bill is a big tax based on last year's income, but this year's kind of skinny. Where's it going to come from? So you
Right.
better have prepared for that possibility that you're going to have a really high estimated tax that you have to pay or you'll be penalized, even though the tax might not be due. But you won't know that until a year later in the spring. So that's a little part that some people don't really like. And some people, the first couple of years in business, maybe don't know that's how it works. It's like, why do I have to pay all this tax? And that's where you get that frustration or that upset about the bills you're paying. It's just the process. So the first part is having the mindset to just deal with what the taxes are. Second part is planning and preparation. Always over plan for taxes. Worst case, you'll have extra to capitalize. You don't want to be short, though. That's where you really get in trouble. Now you're short, you're borrowing money, and it's money that you could be using to grow your business or project, into the next year's business projects. And now you have this line item of tax and maybe tax penalties on top of that. So, just a couple little thoughts, just experience working with my business clients. Don't be surprised or blindsided by that.
Great advice. And I know due to time, I want to see if I can squeeze in one final question for you. Very briefly, how can someone, or what is one financial habit that the tax results tend to reveal, but people tend to ignore?
Whether you've planned or not, and whether you have kept records or not. It's going to be very important to have records to back up everything on every box that has a number in it. You want to have records for that. But then, did you plan? These are the things that surprise people, that upset people about taxes when it disrupts your life and your cash flows. Planning can avoid all of the stress around that for sure.
All right, folks, and we are at the tail end of our show, and you know what that means. It's our Money Truth Tax Challenge. How about that?
Yeah, I would like this challenge to be very reflective. Obviously, you want to plan and you want to, take some of these tips and go, that was a mistake I made. I want to not make it again, kind of things like that. But I want this to be a reflective challenge. And I think if your taxes are already done, if you have businesses and you have not extended, you're done. If you have personal taxes, you're either done or you're wrapping that up right now. I would love for you to just take a moment and reflect on the result of having completed your taxes for the year. 2025 is done, buttoned up, right? You've done all the work, you pulled it all together, got the final thing, signed them, and whatever it is, it is. But do you have that result of it being a frustration, a relief, a joy, an upset? What is the result you have, like emotionally? Like, what's the mindset you have about having completed your taxes? And how is that going to impact any planning or preparation that you do for the next year? What is the impact of that feeling that you have or thoughts that you have about that? And how will that help you improve for next year's planning, record keeping, preparation, vetting, of a professional that can help you? Um, what can you do more, better, different based on what you're feeling right now from this year's tax experience? That's your challenge.
All right, folks, you heard the challenge. And as a reminder, we are here every Tuesday morning at 8 a.m. with the replays on Thursdays at 8 p.m. Also, if you have a topic that you'd like Judy to address, please send us a message and we'll love to put it on the show as well, too. Remember to share the stream. Follow Judy at judycopenbarger.today. Stay tuned for next week when we're going to talk about refunds versus owing and what it says about your cash flow. So you don't want to miss that, and make sure that you share out this episode as well, because it's very, very important. Judy, any last parting words?
Yeah, a couple thoughts about taxes. Most of us don't like it. It feels like somebody's taking something away from us. And in a way, that's true. But we need to have taxation. Tax covers the roads and the infrastructure and all the things that just make life pleasant for us and keeps us free. We need to have some tax. Where we usually disagree is how the tax money is applied and how much is required. So it's not all negative when it comes to taxes. It should be a joy. And if you have a tax problem, it's way better than a cash flow problem. So keep that in mind, right? There's a good side to every downside. Make it a great day, a great week, and God bless you this spring.
Take care, folks, and be safe. Have a great week.